Hi friends, welcome back to my channel. Today we are talking about the 5 terms that every buyer should understand before they make an offer. The first term is earnest money. Now you might also hear earnest money referred to as a good faith deposit. This is money that you, the buyer, put up to show the seller that you are making an earnest or a good faith effort to purchase the home that you are making the offer on. There is no set dollar amount as to what earnest money has to be. But I can tell you, the more earnest money that you put down, the more serious the seller is going to take your offer, because that means that you've got more skin in the game, so to speak. Now, you might be thinking to yourself, well, what happens to that earnest money? Do I just give you a check and it just sits in a file folder somewhere? No, that's not what happens. Earnest money is deposited into the escrow account of the real estate agent that you are working with. At least that's how it's done here in Kentucky. That money will get cashed. That check will get cashed. It's deposited into the escrow account of your realtor, hopefully me, and it stays there until the contract closes, or if for some reason the contract would be released by all parties, then the earnest money is released. Now, hopefully the contract goes through and you're sitting at a closing table. Then the earnest money comes back to you as the buyer on the settlement statement. So it's really just less money that you have to bring at the time of closing. Now, if heaven forbid something comes up and the contract doesn't close, then typically the buyer and seller have to agree who gets that earnest money back. Now, if it's a contingency in the contract that has not been met, then typically the buyer will get that earnest money back. Now, I can tell you almost definitively, if you back out for no reason, if you just get cold feet and you just change your mind, you're probably going to lose that earnest money. But if it's a real reason why you're asking for a release out of the contract, then typically the buyer will get that earnest money back, as long as the contract is written that way. You'll want to talk to your real estate agent, though, to understand the details of your particular contract. So number 1 term you need to know is earnest money, also known as a good faith deposit. The second term that you will want to understand is contingencies. Now, I use the term plurally because there are lots of contingencies that can be in a contract. I'm just going to touch on a couple that are in most contracts. The first is a financing contingency. Most of us don't have the full amount in our bank accounts to write a check for a home. We have to get a mortgage. And so that's where the financing contingency comes into place. The financing contingency says, I am going to get a loan for this amount. I'm going to put this much money down. So my loan to value is going to be whatever percentage it is. I'm going to get this loan at an interest rate not to exceed a particular interest rate, and for a term no less than 30 years for most people. Now, we want to put the terms of the financing into the offer because some financing requires the seller to contribute or take things into consideration as well. For example, if you're doing an FHA loan or a VA loan, the seller is going to want to be aware of those things because the house will have to meet certain criteria as well as you, the homeowner. And so that may change the seller's decision on whether or not they want to accept that offer. You want to put an interest rate in there because anyone will give you a loan, but it may be at 20% interest, and you probably don't want a loan at 20% interest. So we put an interest rate not to exceed a certain percentage to protect you, the buyer. Most people, again, put 30 years for their mortgage because that's what most people take their mortgage out for. Now, if you're doing a shorter term loan, if you're doing an adjustable rate versus a fixed rate, we will put those terms in there, and you'll work with your real estate agent to know what those terms are. As a realtor, I want to know what the financing terms are for my buyer so that I can write that financing contingency as strongly as possible to protect my buyer. So be sure to talk to your mortgage loan officer and your realtor before putting in that financing contingency. The next typical contingency that we see in offers in contracts is an inspection contingency. Most people do a whole house inspection and a wood destroying insect inspection. Sometimes you'll see a particular inspections, such as a structural inspection if you have issues or concerns about the foundation. You might ask for a radon inspection to make sure there's no radon gas in the property. Now, what does that inspection contingency really mean? Does that mean that the seller has to fix everything that's found wrong with the property? No, that's not what it means. The inspection contingency is meant to let you, the home buyer, know what you're buying and what the true condition is at this point in time. It's not meant to create a laundry list of things the seller is supposed to repair. And in fact, most contracts state that the seller is not required to fix everything on the inspection contingency or to even bring it up to current modern day code. It would have to follow the code of when the home was built. So what do we do with the inspection? Typically, we'll have a time frame. I know in the contracts that I write, it's 7 to 10 calendar days for you, the buyer, to do your inspections. I don't personally attend inspections, but I always get a copy of the report that I review, and then I review that with my buyer. You, as the home buyer, should attend the inspection, at least in part, so that you can talk to the inspector one-on-one and have them point out to you what they see with the home. They're looking for current problems, indications of past problems, and red flags that may cause concern in the future. They're also going to tell you how your home works. So they're going to show you where the water shutoff is, where the breaker box is, all of those things that you really need to know when you're buying a home. Now, once you do your inspection, then we're going to move to the next time frame in the contract, which is when we negotiate repairs. So in that 7 to 10 day window, you're going to do your inspection. And if there are any repairs that you want to ask the seller to make, we will write up a repair addendum. We'll then present that repair addendum to the sellers through their agent, and the sellers will decide if they're going to make the repairs. If they're not going to make the repairs, maybe they'll make some, but not all. Or if they're going to give you some kind of concession on the price in lieu of making any repairs. Now remember, the seller doesn't have to make any repairs. It's a negotiation. But typically, if you're being thoughtful and considerate on the front end and only asking for the things that are most important to you, and the seller understands that some things need to be repaired regardless of who buys the home, usually we can work through this inspection contingency. If we just can't, and there's major repairs and the seller won't agree to fix things, then you do have the right to walk away from the contract and receive your earnest money back. Now, you should review the terms of your specific contract because every contract is written slightly differently, but this is a general overview. So we've looked at earnest money, we've looked at contingencies. That now we're going to look at a term that isn't always brought up, but we have seen it a lot, especially as we've been in markets where we've gotten into multiple offers, and that is an escalation clause. What is an escalation clause? So an escalation clause is a clause that we put onto an offer, and it escalates the offer price in certain increments up to a max. So let's say, for example, you're offering $200,000 on a property, but you're willing to go to $215,000. An escalation clause may say, we're offering $200,000. We will raise our offer in $1,000 increments over the next highest net offer up to a maximum of $215,000. Now, this kind of lets you get into a multiple offer situation, hopefully getting it for a little less, but also showing what you will go up to so you're not knocked out right away. Now, I will warn you, sometimes sellers get annoyed with escalation clauses and they just wish you would have made your best offer first. If you're willing to pay $215,000, offer me $215,000. So sometimes escalation clauses aren't the best direction to go, but sometimes they are. This is where you'll want to work with a knowledgeable, experienced realtor to help you understand what's the best way to win out in a multiple offer situation. If the escalation clause is activated, you will see a copy of the other offer that engaged the escalation clause, and then the purchase price will move up to whatever the escalated price will be. Okay, What's next? The next term on my list that every buyer should understand is agency. Agency is who represents who in a transaction. It used to be long time ago, buyers thought they had representation in transactions, but in reality, everybody was working for the seller. That's not the way it is now. And you want to understand who is representing you in the transaction and if they are representing anyone else. You want to make sure your agent has gone over all of this with you and that you fully understand agency. Some people just represent buyers. Some people just represent sellers. Some people represent both parties. These are called dual agents. Dual agency is a perfectly acceptable thing here in the state of Kentucky, depending on the brokerage that your agent works for, but it can be a little tricky. So you want to make sure you understand all of those things. The final term that every agent or that every buyer should know is title. And with title, there's a couple of different elements that I want to talk about. One is the title search and then title insurance. So a title search, when you go under contract to purchase a home, your mortgage lender is going to engage here in the state of Kentucky a title company to go back and make sure that every time the title to the property changed hands, all of the proper signatures were obtained and all liens were released on the property. This will give you a free and clear title to the property. So a title search goes back usually 40, 50, 60 years to make sure that all of the clouds on the title have been released and removed. So the title you're getting to your new home is free and clear of any liens. Now, what happens if there's an unknown defect on the title? For example, let's say that your home is built on burial property of Indians, and all of a sudden an Indian tribe decides that they want to claim their property back. They file a lawsuit. Now you've got to defend your title. That's where title insurance comes in. Now, title insurance is something you pay once and it covers you for as long as you've owned the property. It's meant to protect you from any unknown or undiscoverable defects to the title when you purchase the property. I had a story once, or a case once, where a seller was selling their home. It had been sold multiple times before they bought it, and everything was fine. They went to sell it, and it turns out there was an old land contract that had never been fully released from 30 years ago. My clients didn't have title insurance. If they would have had title insurance, the title insurance company would have stepped in and taken care of everything, and we would have been able to close without a hiccup. Instead, we had to do a whole lot of digging to try to find the heirs and the people who were still involved in this land contract from years ago and figure out a way to get this defect on the title cleared up. Good news, we got it cleared up. My seller sold the house. They're super happy. Buyers are super happy. But it was a headache. So that's where title insurance can come in and really save the day. It's not a lot. If you're buying a home with a mortgage, typically you have to buy a lender's policy of title insurance anyway, so you get a discounted rate on your owner's policy of title insurance. It's a one-time fee. You pay it once. It covers you for as long as you own the home. So it's something to consider buying, but you don't have to. Just something to think about. So we've covered earnest money, we've covered contingencies, we've covered an escalation clause, we've covered agency, and we've covered title, both title search and title insurance. So those are the 5 terms that I think every buyer should understand before making an offer. If you want more information about buying a home, click the link below to go to my YouTube channel where I have a variety of videos on the home buying and home selling process. Have a great day, and I'll see you on the next video.